could be the story of the next pullback. And Saylor himself has said Bitcoin will go from 220 or 250 back to 180. Like he's already anticipating this.
Mm.
And you know, then the cycle will begin again. This idea that we will no longer, we've broke free of the 4-year cycle, right? We've said that at the top of every 4-year cycle, that we've broke free from the 4-year cycle. And then we have a big drawdown. And people, it's like, oh, why didn't I realize that nothing changes and everything is always the history rhymes over and over and over again. So as a Bitcoiner, you know, I like to see the demand for Bitcoin.
Hey guys, welcome to Everyday Finance. Gold, which has always been a sign of wealth and safety, is becoming less shiny. What no one could have imagined is happening. Gold miners are quietly buying Bitcoin instead of the metal they've built their businesses on, like Coca-Cola's makers putting money into. Pepsi, it's a shocking sign that the future of value might not be found in the ground, but in code. Max Keiser, a journalist who has long said this day would come, says Bitcoin is eating gold's story alive. People are taking their money out of gold ETFs and putting it right into Bitcoin ETFs. Bitcoin's rise to 6 figures isn't just a dream if even a small part of the $20 trillion gold market moves. It's math. But this isn't just a party. She says Wall Street will try to keep Bitcoin in the old banking system, but they will fail. What's happening now is bigger. The world's markets are being changed by a slow motion. Financial earthquake while most buyers sleep. So the question still stands. Are we seeing a quiet reset or the start of a financial change as trillions of dollars move from gold to digital code?
Yeah, like Stacy was saying, you know, we were big into gold and silver because it's international and global money. And the show Keiser Report's a global show. So you can't really talk about one region or another. You can't just talk about New York stocks because it broadcasts to the world. So the one form of money that is global is gold. So by kind of focusing on gold, you know, you have a frame of reference for everybody in the world knows a little something about gold or has a little gold. And then, you know, we did a campaign in 2011 called Crash JP Morgan Buy Silver, which was a very, very viral campaign. Hundreds of people were posting videos of them and their gold stack.
Their silver.
Their silver stack. And, you know, this campaign kicked off right after the 2008 crisis and some of the mergers that went on in Wall Street. And JP Morgan ended up buying or inheriting Bear Stearns silver short position, and they were exposed. You know, if silver got to $50 or $60 an ounce, JP Morgan would have gone bankrupt. So we were trying to flame the fire of this massive short squeeze to take JP Morgan down. And that was also when we began to look more into Bitcoin for its really subversive qualities to exist outside of this very, very corrupt banking system. And so we dovetailed into Bitcoin from that point. And as Stacy has said, the reaction was quite negative because at that time, the gold bugs and the libertarians that were primary audience really hated the idea of Bitcoin. So it took about 5 or 6 years to get some traction in that camp. And, you know, that's been great gaining every year. Now we're at another huge milestone with what's happening in Bitcoin around the world. Yeah, with markets, stock markets and financial media, there's a perception that they're impenetrable and the language is very opaque. And the class war usually positions the stock market as owned by the ruling class, and the plebs have to deal with the consequences. But having been on Wall Street for many years, as I have been, I know that the markets are easily hacked. And we're seeing that with Crash JP Morgan Buy Silver you're hacking the markets. We did a project called Karma Bank where we were trying to hack markets in the favor of activism. And then Bitcoin came around, and it's just another hack really to subvert the worst tendencies of markets and concentration of markets to decentralize and to democratize wealth. And, you know, that's what Bitcoin represents. And So that's always been an interesting story because you have, to Stacy's point about telling stories, you need a villain, you need a hero, you need a dramatic arc. And so Bitcoin is really the hero and the bankers are the villains. And so that's a story. And that story is much more interesting than, let's say,
Hmm.
James Cramer over at CNBC, who simply like says, buy this stock and he, hits a tambourine or something and does something crazy. But there's no real story with James Cramer. It's just buy this, sell that. There's nothing really interesting with what he said. So how do you turn that
Mm.
into exciting, dramatic television is what we were able to do. Well, I didn't say 2025. I just said it's in play.
Right.
2.2
Thank
million
you for correcting me.
is in play. What do what the it's easy to see where this is going, and so it doesn't seem like a stretch. The total addressable market is 400 trillion. The total addressable all the fiat money world, it's literally a Ponzi scheme, and you can't taper a Ponzi scheme, and it's starting to unwind. Now there's I believe an effort that they believe in Washington and elsewhere, they're going to keep this Ponzi scheme going. I just don't. I think we're at the end game. I think they're at the end game for both the central bank model and the nation state model. After 300 years, I think this is all coming apart. And Bitcoin will emerge as the global reserve standard. And so that means, and everything goes to zero against Bitcoin. So, I think Michael Saylor has a $13 million per Bitcoin prediction out there. And I can see how you can get there because you're talking about squeezing 400 trillion into 21 million units of Bitcoin, right? The price discovery tells you where the price is going and they can't make any more of it. So it's not hard to come up with these numbers. And we've been right. I mean, the only really important price prediction I ever made was in 2011 at the first Bitcoin conference in Prague when Bitcoin was a few dollars. And I said in my speech to the conference that if this works as an asset class and captures 1% or more percent of global Forex, then this is a $100,000 per coin asset. Okay, that's really the only important prediction I think that I made, because obviously if you were riding it from $1 to 100,000, you got the lion's share of gains in this asset. And to give credit, it was also Rick Falkvinja who started the Swedish Pirate Party, who was also at the event, who also did a presentation along these lines as well. So he was really also really seeing the potential of Bitcoin at that time as an asset class and being competitive in the global asset world, where I know as a stockbroker, you have a fiduciary responsibility to at least consider these assets. And if so, if it pops up on your Bloomberg machine, it's going to gain traction and the market's huge and the price is going to go up. That's it.
Under the top, something very big is moving. Capital isn't just leaving gold, it's moving around. Marathon, one of the biggest Bitcoin miners, just added 400 BTC to its own bank sheet. This means that miners are now the new safe places to store valuable things. The people who make hard money are promising to support its digital replacement. Analysts say that even a small change, just 1% to 2% of the $17 to $30 trillion gold market, could send Bitcoin into the six-figure range. Why? Bitcoin is better than gold because it has a fixed quantity and a design that can be programmed. It's clear that institutions believe this because global crypto ETF inflows just hit a record. $5.95 billion as Bitcoin hit new all-time highs. There is more and more confidence. Gold is still alive, though. Deutsche Bank thinks that by 2030, Bitcoin and gold could both be on the balance sheets of central banks. They would be partners in scarcity rather than competitors. But the energy isn't spread out evenly. Gold used to be the story of shortage. Now Bitcoin makes it even better, liquid, programmable, and verified on-chain. As long as this trend keeps up, the untouchable safe haven of the past may soon give way to the digital territory of the future.
Well, the primary use case of Bitcoin is separating money from state. So when corporations are buying Bitcoin and you're buying shares in those corporations, you're reuniting money and state. So it's going backwards from the primary mission, right? The vector that it's on is to separate money from state. And it's as profound a change to society as separating the state from the church, right? That was an amazing leap forward for humanity in a lot of ways and gave us the Enlightenment. And separating money from state is sets the stage for something similar to happen to society, a huge leap forward of self-sovereignty, and that would be self-hodling Bitcoin. On the corporate treasury front, you've got a lot of companies with a lot of cash who are buying a lot of Bitcoin. You know, the thing about Michael Saylor is that back in 2020, he had $500 million on the balance sheet, and he could have done what every single CEO in America has been doing for 20 or 30 years, and that is to buy back his own stock. That would boost earnings per share, which would make his stock options go higher, and he could make a lot of money that way. But he took the very bold step of trying something no one had tried before and done before. He put that $500 million into Bitcoin, and he set in motion something that has profoundly changed corporate finance. So the melting ice cube was addressed. He went from the problems with fiat money to Bitcoin. Then the next step was, you know what? I can actually go into the market and sell stock, and I can sell bonds, and I can use the proceeds to buy Bitcoin. So then we went into this idea of dilution equals accretion. Because normally when a company sells stocks or bonds, you're diluting the earnings per share, and therefore the multiple would drop down, and so would the price. So he's saying, no, actually dilution, and with our company, it's accretive because we're going to instantly buy Bitcoin, and Bitcoin is going up forever. So that's the beginning of his at the market stock sales, etc. And stock is looking good. It's getting a lot of attention. Then he goes into another phase, which is these convertible preferreds and other kinds of stock offerings that would appeal to different pockets of money. You know, some are looking for volatility, some are looking for income. And he had the biggest IPO of 2025 so far with one of his spinoffs. And that money is going into the balance sheet, and he's buying Bitcoin. And I think that Michael Saylor is a one-off, just like President Bukele is a one-off. I think that these other companies that have come along that are trying to do what he's doing, they don't think they know what he's doing, but they think they know what they're doing and what he's doing, and they're not necessarily going to be successful at it. And they've already said that if their stock price trades at a discount to their Bitcoin position, they're going to sell their Bitcoin and buy back their stock. So it's going to unwind those positions, where they don't think Michael Saylor and Strategy would ever do that. But these newer companies have already said they would do that. So what you have here is the makings of another blow off top, because you're going to have lots of companies all over the world engaging in this strategy, taking out debt, buying Bitcoin. You're going to see a typical correction of 10 or 15% become a 30, 40, 50% correction because of the unwinding of all these corporate treasury companies. Could be the story of the next pullback. And Saylor himself has said Bitcoin will go from 220 or 250 back to 180. Like, he's already anticipating this. And you know, then the cycle will begin again. This idea that we will no longer, we've broke free of the 4-year cycle, right? We've said that at the top of every 4-year cycle, that we've broke free from the 4-year cycle. And then we have a big drawdown. And people, it's like, oh, why didn't I realize that nothing changes and everything is always the history rhymes over and over and over again. So as a Bitcoiner, you know, I like to see the demand for Bitcoin. Yeah, that's a good point Stacey brought up. We knew the material worked because we had done it on radio and Paris Live Radio. We also had a show in London on Residence FM.
Yes.
For 10 years. And it was a show called The Truth About Markets. And when we did the first show of that show, the producer said, I'm totally shocked because I thought the show would be about farmers markets and those types of markets and the stock markets. And so the truth about markets was essentially, you know, when you read these financial headlines and these financial publications, what's really going on, you know, kind of like how do brokers talk about markets? You know, it's like inside baseball or an insider view of how the people who sell this stuff every day on Wall Street or the City of London, how do they approach it? You know, what's their how do they talk to each other? So we kind of brought that to the fore and made it like you're got a bird's eye view into what the approach really is. And so we knew the material worked. So the producers were not really understanding what we were saying, but they knew that the audience reaction was really big, because also the 2008 crisis was an enormous punch to the gut for millions of people around the world. And they wanted to hear somebody not try to explain it in economic terms about why this happened. They wanted to someone to channel their anger. So a lot of my TV appearances at that time, are characterized by me being angry and really shouting at people on television. But that was, channeling that anger, that when somebody lost their house or they got wiped out because of the 2008 crisis, it's not because it was an intentional crisis, because the crisis was an engineer, it was a controlled demolition, and they have the right to be angry. So that was a message that people wanted to hear. And then in Greece and Iceland, the Troika, those economies went into free fall. And we became something like folk heroes in Greece and Iceland because we were speaking up for the communities who were being blown apart. Because in the financial world, it's easy to use extremely jargonistic language and obfuscation to hide what is essentially larceny.
A change in money is happening. As money leaves gold and silver, it floods into Bitcoin, which is a historic turn in the world markets. In October 2025, traditional safe havens failed, while Bitcoin went over $112,000 and barely touched $125,000, making it even more powerful. This isn't just a price rise. It's a new way of keeping your cash safe. The Great Rotation shows that more and more people are sure that digital assets, not valuable metals, are the best way to protect against inflation, currency debasement, and systemic risk. Bitcoin is the best asset to hold when fiat money isn't trusted because it has a fixed quantity. It's decentralized and is being adopted by institutions more quickly. ETFs are getting record amounts of money. Business treasuries are switching to Bitcoin, and even sovereign wealth funds are trying it out. What started as a crazy idea is now the most important part of modern portfolio strategy. Max Keiser has been saying for a long time that this day would come when everyone understands that Bitcoin is more than just digital gold. It's the basis of monetary sovereignty. As interest in altcoins grows and crypto infrastructure improves, this change looks less like a trend and more like a permanent move. No longer is it a question of whether Bitcoin should be part of the global system. Now the question is whether investors, institutions, and states can afford to ignore it.